Traders, in today's amazing video, we're going to be talking about the dead cat bounce. Okay, it's an institutional approach to the dead cat bounce. You're not going to see that anywhere else on YouTube. Direct from the trading floor, a very clear three-pronged approach on how to trade the dead cat bounce. We're going to incorporate the footprint, look at how real buyers and sellers interact when we have a situation such as the dead cat bounce. Can't wait to see you on the other side. Okay traders, here we are. As always, the best way to look at something like this is on the chart, so you can already see you're going to be getting a unique perspective. You've got the footprint here, okay, which allows you to see inside what is going on within here. Completely unique perspective on the dead cat bounce. Let's start with what is a dead cat bounce. Well, dead cat bounce is when you have a prolonged decline. Okay, so in this case intraday, you've had a fairly hefty sell-off and you get a temporary bounce back. And actually I've got it written down here. Basically it's derived from the idea that even a dead cat will bounce if it falls from a great height. Okay, I don't like to talk about dead cats, but let's be honest, if you imagine a dead cat falling from a large height, it's gonna have a slight bounce to it. So that's where it's derived from, and it's actually quite a good fit to what we see in the markets all the time. We all know it. We're all trying to catch a falling knife, so you can see that here. And you know, we can get easily trapped into thinking we're going to get a sudden snapback. We don't. It tends to be a very shallow bounce, and then it just falls away again. Okay, that is a dead cat bounce. Okay, where you think the market's going to bounce, it doesn't. It has a tiny little pathetic reaction, and then it just continues on the way down. So how do we actually deal with this? Well, firstly, you know, just looking at a standard candlestick chart or whatever, you've got no hope. Okay, you might as well be at the casino. I've said this before. Just go and gamble, because you know you're not going to fare any better. If you actually want to be serious about it, then obviously you need to be able to look inside. But actually one step deeper than that. Number one, it is psychology, okay? Take a deep breath, okay? Breathe. Why do I say that? I don't want to get into neurology, but I hear this people talking about psychology all the time. And actually, the reality is, if you think about our DNA and how we are built, right? In terms of our reptilian brain, it's very instinctive and reactionary. We have this natural reaction to think that when price collapses, things are cheap, right? It's how we're built. If you think about it, if a car is at $20,000 and it suddenly drops to $10,000, you're going to be like, oh my God, it's the bargain of the century, fire sale, I need to buy that. Financial markets can have much more prolonged, you know, a car's not going to then drop to $5,000, is it? It's just not going to happen. And because the fundamental value of the parts that make up a car typically hold their value over periods of time. They tend to be quite sticky. Whereas in financial markets, fundamental changes can occur very quickly in the dynamics of demand and supply, which again you can actually see here, interaction of buyers and sellers, and we can actually get prolonged declines. So you need to take a step back, remind yourself of that, so breathe. Number two is interaction, okay? This is where things start getting very interesting, okay? And something you're not going to really see anywhere else on most trading videos is, and it makes sense, right? You need to have a look at what's actually going on inside here. Zoom into it, okay? Think about it. Name me one single business in the comments that, if it's trying to understand the dynamics of its business in terms of prices, what prices should they sell their goods and services at? Are they looking at price action on a chart or some indicators? No, of course not. It's completely ridiculous. They're looking at the dynamics of buyers and sellers in their marketplace. Sorry about that. And basically, to do that, they need to have a look at the raw data. So that is here. So let's have a look at that together, just very, very quickly. Literally want to spend no more than a few minutes on this. Don't really want to get into intricate detail because we could spend many hours. But if you actually have a look at this area here, right, so it's about 12.10, which is this area here, you can actually see that buyers and sellers are still very undecided. Can you see how messy that is? And I'll show you when we go further down how much cleaner it becomes. Look at that. No clear buyers or sellers. It's very much a battle still taking place. People are still trying to decide about whether the initial sell-off should hold or not. So don't let your instincts come in and say, oh, it's cheap, I'm just going to buy. No, that's catching a falling knife. You don't need to do that. Wait for the market to resolve itself. Okay, so that's part of number 2, resolution. Okay, you really need to wait. Markets have a lot of buyers and sellers, as you can see here, coming in, trying to decide and digest new information. That can take time. So let it just resolve itself. We then see, a lot of people that tried to catch this bounce, which ended up being a dead cat bounce, then had to sell. So they added fuel to the fire in terms of the next collapse. We then got a collapse and we go further down to kind of 1 o'clock, and let's have a look. Okay, and you'll see, and this is the final bit of the video and then we're done. Can you see how much cleaner it is? Look at that. Look at the difference there, guys. Hopefully you can see that. It's so clear. Can you see that? It's so much cleaner. We had this clean sell-off, right? You can see the clean sellers coming in. You can see it here in the delta percentage. Very, very clean selling. And then look at that. Clean buying, clean buying. Do you see it's not all bunched together? It's very clean. The sellers are quite distinctive. They have a last little push. The buyers are now much more certain and confident about a turnaround. So you can see here, almost unchallenged. Look at that, plus 1,000. Very, very clean buying coming in. The sellers are also happy now. They've kind of made their money. Resolution has happened. And that leads me to part number 3, which is go with the buyers then, right? Clean buying, 3. Let them lead the way, okay? And then you can get in slightly after, right? So don't get trapped in these areas. And then we can see here, this is therefore turning out to be another dead cat bounce, and it ends up not being a dead cat bounce. It ends up being a live cat bounce, right? A cat that is alive, basically. So just to summarize, and I'll show you exactly where you can get all this stuff from, the footprint and how you can learn more about it in just a second. Number 1 is take a deep breath, okay? And I mean that very seriously. Breathe. Number 2, look at the interaction between buyers and sellers, right? Which you need to get access to, and anyone can get access to this very, very easily. Okay, it's open to everyone, so you can do that. And then number 3 is wait for the buyers to come in, okay? And then you're going to more likely catch the actual bounce rather than be trapped in one of these. So anyway, how do you get access to this stuff? Well, head over, if you want, to I've got a completely free training, amazing training. In fact, I'll put the link there, www.g7fxfreetraining.com. You can also catch me on Instagram at NVForex. Just finally, guys, if you like this stuff, hit the like and subscribe button. Hopefully that was useful. Completely unique institutional perspective on the dead cat bounce. Have a great day.